The sell side just blinked. For the first time in 7 days, outflows beat inflows. And SHIB holders need to understand what that means right now. What is happening and what on earth am I even talking about? Well, let me explain. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. The on-chain exchange data for Shiba Inu just produced a reading on May 13th, 2026 that breaks a week-long pattern in a way that could not have been predicted by looking at the price chart alone. While the price has been grinding sideways and the community has been navigating uncertainty, something shifted underneath the surface at the exchange level. The direction of token flow between exchanges and private wallets reversed. And in crypto markets, directional reversals in exchange flow are often the first signal of a shift in market character before the price has had any chance to confirm it. Keep watching because this reading deserves your full attention. Let us first establish where SHIB sits technically. According to market data, the price is trading near 640 units with a market cap of approximately $3.8 billion, with higher lows continuously forming since the February bottom. Each pullback has terminated at a higher price than the one before it. That pattern is the hallmark of an asset where the seller side is gradually losing capacity to push the price to new lows. The price recently climbed above a resistance level that had been containing the recovery since early May. That break established a new higher plateau, and the exchange flow reading from May 13th is the on-chain layer of evidence that supports why that plateau is holding rather than giving way. So let us talk about the specific number and what it tells us. Here is what is wild. On-chain trackers indicate that on May 13th, 2026, the SHIB exchange net flow measurement fell to approximately negative 42.4 billion tokens, marking the first time in 7 days that outflows exceeded inflows. With SHIB registering net negative exchange flows, more tokens departed exchanges for private wallets than arrived from private wallets onto exchanges during the same period. Every token sitting in a private wallet rather than an exchange is a token that cannot be sold with a single click. It is supplied deliberately, moved away from the most accessible route to the market. And a negative net flow reading means the net direction of SHIB supply is away from exchanges, not toward them. Here's the kicker. What makes the May 13 reading so specifically significant is its position within a sequence. For the 7 days preceding this reading, the net flow had been positive every single day. Inflows won each session. The exchange-held supply of SHIB was growing incrementally day by day, building a pool of tokens available for immediate sale. 7 consecutive sessions of seller-side wins created a specific environment where any upward price attempt was running into an order book continuously refreshed with new supply. But a single session where outflows beat inflows by 42.4 billion tokens does not undo 7 days of positive flow in one move. What it does is signal that the behavioral trend driving those 7 sessions has ended. The holders depositing tokens to exchanges have stopped, and the holders moving tokens away have resumed. And here is what the psychological mathematics of a 7-day streak ending actually produces. When positive net flow persists across 7 sessions, it becomes the expected baseline. Analysts price it in, traders factor it into their positioning. The community accepts it as the current state of the market. When that baseline breaks on day 8, the psychological recalibration is faster than the data would suggest. 7 days of conditioning around one narrative get challenged by one session pointing in the opposite direction. And in liquid markets where positioning is constant, that challenge triggers a repricing of near-term expectations before the price has had any opportunity to respond. Now, here is where it gets interesting. According to reports, the negative net flow arrived on the same day that SHIB's ascending chart structure remained fully intact. The sequence of higher lows building since February 2026 had not been violated. The recent resistance break above the early May ceiling had not been reversed. The momentum indicator was positioned above the neutral midpoint without showing overbought warning levels. Each one of those technical conditions on its own would be unremarkable, but a negative net flow reading landing inside a session where all 3 technical conditions remain intact creates a specific convergence. The supply side improved exactly when the chart was positioned to absorb that improvement and potentially act on it. And here is a specific arithmetic observation that most coverage of this event has completely overlooked. The circulating supply of SHIB is approximately 589 trillion tokens. The 42.4 billion negative net flow on May 13 represents a tiny fraction of that total. But the relevant comparison is not 42.4 billion versus 589 trillion. The relevant comparison is 42.4 billion versus the daily trading volume that actually determines price in the open market. When 42.4 billion tokens shift from the exchange accessible category to the private wallet category in a single day, they exit the portion of supply capable of absorbing buy orders. That exit from the active supply pool is what gives the net flow reversal its price relevant significance, not its size relative to total supply. Think about what the arithmetic of a negative net flow session actually changes for the price structure. According to data, the 7 sessions of positive inflow had been depositing tokens into the exchange order book, making each unit of incoming buy demand less effective at moving price because more supply was waiting to absorb it. The May 13 session reversed that by 42.4 billion tokens. That 42.4 billion exited the exchange order book and entered private custody. Each of those tokens is no longer available to absorb buying pressure without the holder making a conscious decision to return it to an exchange. The resistance facing any upward price move on subsequent sessions is measurably thinner than it was before this reading. There is also one final observation about where SHIB sits relative to the rest of the meme coin category that adds weight to the May 13 flow reading. The token has been demonstrating relative price strength compared to other speculative assets over recent sessions. Bitcoin has been providing a supportive macro backdrop, and community conviction metrics including wallet activity and burn participation have been elevated. Negative net flow arriving inside that kind of broader environment is not the same as negative net flow arriving during a risk-off panic. When supply retreats from exchanges during a session of relative meme coin strength with a supportive macro environment, the signal carries considerably more weight than it would in a weaker overall market context. Look at a comparable flow reversal from SHIB's own history. In the weeks preceding multiple recovery phases in prior cycles, on-chain data consistently showed the same sequence. Positive net flow dominated for an extended period while price consolidated. Then a single session of negative net flow broke the streak. According to reports, in the sessions that followed, if the negative reading sustained rather than reversed, the price began responding to buyer-side demand with less friction. The reduced exchange supply created a lighter resistance environment, and lighter resistance amplifies the price impact of any given unit of incoming demand. The Shibarium ecosystem continues building its development roadmap. The burn mechanism has been generating elevated destruction rates in recent sessions, and the community watching this specific flow reading understands exactly what a week-long inflow streak ending means for the supply dynamics governing short-term price behavior. 7 sessions of sellers winning, then 1 session where they lost. That asymmetry is small in duration but large in what it implies about the direction of holder conviction right now. Negative net flow, intact ascending structure, the 100-day EMA directly above as the next meaningful test. The setup is the clearest it has been in weeks. So what do you think? Does negative net flow sustaining for multiple sessions finally push SHIB through the 100-day EMA? Drop your prediction in the comments. Right now, click on one of the videos on screen for more, because this story moves session by session and every data point matters. Hit the notifications bell immediately, because if the negative net flow holds into the next session, the price implications could accelerate without much warning. And share this video with every SHIB holder you know. The ones who track exchange flow data are always the ones positioned before the move rather than after it.